Good evening. Thanks for joining us on India Business Hour. I'm Shireen Bhan. Straight to the day's market action. A strong day for the bulls on the Lal Street as the key indices traded in the green, closing the session with decent gains. In fact, the Nifty was the outperformer, closing above 11,000. The Sensex also saw some strong buying, ending the day with 358 points of a gain. Bank stocks gaining ahead of the RBI policy tomorrow. The mid-cap index recovered by 200 points and closed with minor gains. So that was the story for our markets going into the monetary policy fairly strong. But the top story tonight, with Priyanka Gandhi by his side, Robert Vadra arrived at the Enforcement Directorate's office for questioning today over an alleged money laundering case. Vadra has already secured immunity from arrest till the 16th of this month from a Delhi court. The BJP stepping up its attack against Robert Vadra, accusing him of receiving kickbacks even when the UPA government was in power. Taking everyone by surprise, Priyanka Gandhi went straight to the Congress headquarters after dropping Vadra to take charge as General Secretary. She was supposed to do this tomorrow, but she's done it a day earlier. After that, Gandhi told reporters that she wanted to send out a clear message that she stands by her husband, who she claims is being targeted for political vendetta. Officials in the Enforcement Directorate say Vadra bought several flats in London between 2005 and 2010. The crux of the questioning is likely to be based on emails exchanged between Vadra and Manoj Arora, an employee at Vadra's company Skylight Hospitality. Vadra and the Congress have dismissed the charges. The BJP has long been accusing Vadra of corruption and promised to arrest him if voted to power in 2014. However, the first FIR against Vadra was filed just 5 months back. The Congress has called Vadra a private citizen so far, but that no longer holds. With Priyanka Gandhi as the General Secretary of the Congress sending out a clear message, here's Parikshit Luthra reporting from the Congress headquarters on what has turned out to be a dramatic first day in office for Priyanka Gandhi.
After making that big political statement by accompanying her husband Robert Vadra to the Enforcement Directorate office, Priyanka Gandhi, the newly appointed General Secretary of UP East for the Congress Party, arrived here at the AICC headquarters. This was a surprise visit. Nobody knew or thought that she would be taking over today. Everyone thought that she would be taking over at 4 p.m. on Thursday when the meeting of AICC General Secretaries takes place here at the AICC headquarters. That was supposed to be presided by Rahul Gandhi. Everybody thought that that would be the formal takeover, but she surprised everyone. And there was a huge crowd of people that gathered here. There was complete chaos at the AICC headquarters. Everybody wanted to get a glimpse of Priyanka Gandhi, including the party workers who have been gathering here. Many have been ticket hopefuls as well, and all of them moved inside the AICC headquarters. Let's go inside and take you towards the room where Priyanka Gandhi sat. This is going to be the official room of Priyanka Gandhi. She sat there for about 25 minutes or so. She met workers from Uttar Pradesh. There were also some spokespersons of the Congress Party who managed to have a small conversation with her. This includes Priyanka Chaturvedi. Mainly, she met workers who had gathered here. She met workers from the UP Congress. This is Rahul Gandhi's room in the Congress headquarters, and this is where Priyanka Gandhi was. This is her room, Priyanka Gandhi Vadra, General Secretary. Interestingly, this was the room that Rahul Gandhi used to sit in when he was the Vice President and also when he was the General Secretary of the Congress Party. This is also the room of Jyotiraditya Scindia. It is here where Priyanka Gandhi sat for about 20 minutes, met party workers and left amidst complete chaos. She would be attending meetings of the Congress Party now. She would be a regular face here. A tough battle. UP East is the place which has Varanasi, Gorakhpur. It's going to be a tough fight from here on. She also told the media that she stands by her husband, sending out that message that despite whatever the BJP might say about Robert Vadra, she stands with him, and the Congress Party would be fighting all these allegations in the media and in the public as well. With us right now is Priyanka Chaturvedi of the Congress Party, who got a chance to meet Priyanka Gandhi briefly as she took formal charge. Priyanka, you met her for a few minutes.
Yes.
What transpired? She was there at the AICC headquarters for about 25 to 30 minutes.
Yes, so she met a lot of party workers from Uttar Pradesh as she took charge of Uttar Pradesh East. And she's trying to also understand how the dynamics of Uttar Pradesh work, though she is very well entrenched in the understanding of how UP works. But she met a lot of people from UP. Then she met a lot of office bearers of AICC. I happen to be one of them. So it was a very interesting conversation where she was informal, wanted to know how things are, and looking forward to her entire responsibility.
So what will be her role from now onwards? Have the campaign meetings for Uttar Pradesh East begun?
No, I think they have been in discussion, and she has been also in conversation with Jyotiraditya Scindia ji. So as we move forward, after the General Secretaries meet tomorrow and State in Charges meet tomorrow, we'll see a better blueprint of how we're going to go ahead with this entire campaign beginning from Uttar Pradesh.
And Priyanka, my final question. I think there was a big message when she arrived at the Enforcement Directorate headquarters with Robert Vadra. She also told the media that I stand by my husband. What does that mean? What is a larger political message?
No, I think more than a political message, it is also very clear how all branches of investigation have been activated ever since she took charge and took active interest in the political space and was given a formal responsibility in the Congress. So just by the virtue of that, how the Bharatiya Janata Party leaders, spokespersons, MLAs, MPs and their senior leaders have been hitting out at her, making personal commands, derogatory commands, using abusive words to describe her, just goes on to show their mental state of mind. And again, beginning the Enforcement Directorate investigation, which we have been maintaining has been politically motivated ever since 2012. This was what was the BJP's war cry, starting from Prime Minister Modi, being 5 years in the government and not being able to find any single accusation which they could prove. Right. This goes on to show that it is a political witch hunt, and she stands by her family.
Well, Priyanka Gandhi surprising everyone, taking charge as Congress General Secretary a day ahead of when she was expected to, on the same day that her husband Robert Vadra was questioned by the Enforcement Directorate. Will Vadra turn out to be a political liability at the start of a political innings? That, of course, is the big question. Now, the Reserve Bank will announce the 6th bi-monthly monetary policy statement tomorrow. The MPC meeting entered its second day today and will be Governor Shaktikanta Das's first policy announcement after he took charge in December. The last three policies have maintained a status quo on the repo rate. Will it be any different this time around? Well, a majority don't seem to think so. A CNBC TV 18 poll suggests that it will be a change in stance, not in rate. Ritu standing by with the details. Ritu.
Well, you know, logic demands that when you have a budget which promises to boost consumption, the Reserve Bank of India should go into a tightening mode. But that is not something that we should see from the Reserve Bank of India, given how benign inflation has been in the last few months. So 90% of the respondents that we actually polled believe that it will be a status quo policy, as the RBI will refrain from a cut also this time around, given some of the fiscal pressures and the fact that crude prices have been inching up. But there is 100% of the economists that we polled expect a change in the stance of the RBI from calibrated tightening to at least neutral, which will then take them to further rate cuts. And 50% expect at least one, 25 basis point rate cut in this entire calendar year, and another 50% expect two rate cuts of 25 basis points each until December. No action is expected as far as the CRR tool is concerned. Economists don't really expect RBI to use this just yet. On the macro parameters, GDP forecast is largely expected to remain unchanged by 60% of those we polled at 7.4% for this financial year. And for the first half of next year, where RBI pegged it at 7.5%, that, many expect will be lowered, given that the government itself is also now projecting a 7.5% growth for FY20. And the first half is typically expected to be slightly slower, and therefore that revision is expected. Now, on the CPI front, there have been 6 revisions in the last 1 year from RBI. This time around, the majority expected to remain unchanged, at least as far as the second half projection for this financial year is concerned. For the first half of next year, 80% are expecting that will also be left unchanged as the RBI, watches for more data that will emerge. The tone of the policy, of course, now, that inflation has been below about 2.19% in the last reading, below 4% for several months in a row. They do expect RBI to sound more dovish, but yes, overall, it will be an important statement to watch out for also, because it is Shaktikanta Das's maiden policy.
It is his maiden policy, so the street unanimous, no rate cut, or at least unlikely, but definitely a change in stance. Latha, what are you expecting?
This time, as we enter the monetary policy, clearly the odds are divided. It can go either ways. First, I would root for a rate cut because there are some very sound data reasons. Inflation readings. For the next 2 to 3 quarters, the expectations are that inflation will be at the most at 4%, for a better part below 4%. And of course, even the RBI model has not been very good. The last 2 years average has been largely below 4%. Again, looking forward, let's not look backward. Global factors are indicating benign. The Fed and the ECB are all pointing to lower growth and hence lower inflation. The Indian debt markets are still hurting, and they can do with a little bit of help. So a rate cut will certainly be helpful. Now is the time really when you can find space for a rate cut. But there are skeptics. And look at that, 90% of the respondents in CNBC TV 18 poll said that they expect a status quo, no rate cut. Our own Citizens Monetary Policy Committee also voted 3:2 for a no cut. And their reasons are: first, fiscal stimulus. Why give a monetary stimulus when there is already a fiscal stimulus? They believe that the budget, 3.4%, is not to be believed. The tax estimates are, overdone. And then, fiscal stimulus is also coming from things like, the loans hidden in FCI. If the RBI gives a big dividend, that will be yet another fiscal stimulus. So also that's a blow to RBI's credibility. An important point is the RBI stance until the previous policy was calibrated tightening, and the previous governor said cuts are off the table. Now to change stance and give a cut at the same time, especially when core inflation is still high. Core is non-food, non-fuel inflation. That is still very high at 5.7%. So it is quite difficult for the governor to convince his deputy governor and ED to vote in favor of a cut this early. Maybe they will have to wait. That's what many people believe. And finally, the impact. Even if there is a cut, yields will at most fall by about 10 basis points to 7.35 on the 10-year. If you don't get a cut, they will rise at the most 10 basis points to 7.65. And none of this is going to get translated to the NBFCs or the corporate sector because of the tightness in the debt market. So basically, not so much at stake, I would say.
All right, Lata, thanks very much. Of course, do tune in to CNBC TV 18's coverage. We're going to be tracking the Monetary Policy Committee meeting from about 11 o'clock tomorrow, so watch out for that right here. On our earnings radar, Vodafone Idea reported a whopping 5,000 crore rupee loss for the second quarter since the merger of Vodafone's India operations with Idea last August. The company's revenue was a minor miss, but EBITDA and margins have been ahead of street estimates. Kritika joins us now with the key highlights. Kritika.
Well, this is the first full quarter where we can compare the numbers, considering the deal happened in August, so September wasn't comparative. Revenue down by 2.2%, slightly lower than what we were expecting, but net loss is the big disappointment. 5,004.6 crore rupees of a loss because of a higher tax outgo and a loss of 35 million subscribers. Even then, EBITDA is up by 11.4%, margins at 9.7%, better than what we were expecting. Now, ARPU is what you need to look at. ARPUs have come in at 89 rupees, up by 1.5%, but that's largely due to a minimum recharge plan that came into effect in this quarter. So if that doesn't continue, that's a negative. Minutes of usage down by 2.5%, largely due to the introduction of service validity vouchers. Data volume 11.5% up. Now, even the overall subscriber base has gone down. The one thing that Vodafone Idea can take heart from is expansion of their 4G subscriber base by 9.5 million. All in all, the integration seems to be hitting numbers to an extent, but the fact that margins are positive should be something that the street can take heart from.
All right, Kritika, that's as far as Vodafone Idea is concerned, but hang in there because Cognizant also came out with its Q4 numbers. The company's revenues up 8%, coming in at over $4 billion. For the entire year as well, Cognizant's revenues were higher at the higher end of the guidance at 8.9%. Even in constant currency, the company beat its guidance. However, the top tech rejig was the big announcement that was made. It has appointed Vodafone's Brian Humphreys as its CEO, while Frank D'Souza will become the executive vice chairman. Kritika, what do you make of that?
It is the end of an era. Francisco D'Souza, who is the co-founder of Cognizant and has been the CEO for 12 years, has decided to move on from the operational role. So at this point in time, he continues as the vice chairman and CEO till 1st of April. 1st April onwards, Brian Humphreys, who is currently the CEO of Vodafone Business, will be taking over as CEO and member of board. So 1st April to 30th of June, Francisco D'Souza will help Brian in the transition and will continue new, or rather will function as a full-time vice chairman only. After that, from the 1st of July, he'll take over as the vice chairman of the board. So in terms of the day-to-day operation, there isn't going to be much that Frank, who that's the name that people call him, is going to be involved in. In his statement in the conference call, he indicated that last year he decided that it was time to move forward and had communicated this to the board and has expressed confidence in Brian. Now, a negative here is that with Frank not being a part of day-to-day operations, Rajiv Mehta, president of the company, has also resigned. So club both of them together, it is a sentimental negative. But given that there is some time for transition, Cognizant should be able to form a strategy before April.
All right, end of an innings there in his capacity as CEO at Cognizant for Frank D'Souza. Now, Flipkart CEO Kalyan Krishnamurthy has denied the reports that Walmart is looking to exit the e-commerce firm. In internal communication sent out to Flipkart employees, Krishnamurthy said that Walmart remains committed to India and is unfazed by any short-term hurdles. Remember, a report by Morgan Stanley claimed that Walmart may exit India as the Indian e-commerce market is becoming more complicated. Priya Sheth joins us now with the details. Priya, so Kalyan Krishnamurthy as well as the Walmart global team making it clear that they're here to stay, they're not giving up on India just yet.
Walmart is here for the long term and will not walk away from India. These statements come after a recent Morgan Stanley report said that Walmart may exit Flipkart in light of the new FDI regulations on e-commerce. Now, do remember that the government had issued Press Note 2 with regards to FDI on e-commerce on December 26th of last year, which tightened regulations in the online space. Now, these regulations, which saw much opposition from players like Amazon as well as Flipkart, have come into effect from the 1st of February. In a letter to employees, Flipkart CEO Kalyan Krishnamurthy reiterated Walmart's commitment to India and said that Walmart remains extremely confident in the potential of the Indian market. He said that by partnering with Flipkart, Walmart has taken a long-term view of the opportunities and is unfazed with any short-term hurdles. It will continue to focus on serving customers, sellers, partners, as well as the broad economy. So it'll be interesting to see how the e-commerce space shapes up, players adapt to the new regulations, and how sales numbers eventually stack up going forward.
Okay, Priya, thanks very much. In fact, Walmart has reacted to those reports as well. The company's Executive Vice President and Regional CEO for Walmart Asia and Canada, Dirk van den, has released a statement, and I quote, Walmart and Flipkart's commitment to India is deep and long-term. Despite the recent changes in regulation, we remain optimistic about the country. We will continue to focus on serving customers, creating sustained economic growth and bringing sustainable benefits to the country, including employment generation, supporting small businesses and farmers, and growing Indian exports to Walmart's global markets, end of quote. Well, the Telecom regulator has defended the new broadcast tariff regime that kicked in from the 1st of this month. We learned that so far only 30 to 40% of DTH subscribers have migrated to the new plan. TRAI Chairman R.S. Sharma, however, feels that the progress so far has been satisfactory. That's not all. He's also quashed a CRISIL report that claims that post the rollout of the new regime, monthly television bills for viewers who opt for the top 10 channels may go up by 25%. Farah Bukwala joins us now with more. Farah, take us through the progress that's been made on the migration so far.
First up, let me just take a moment to say that, the new TRAI order came into effect on the 1st of February, and what it attempted to do was to allow consumers to pick the channels that they want to watch, either on an a la carte basis or through packs that have been announced by distribution platforms, and make their selection and move into that new regime. Now, what I have picked up from my sources is that as we speak, DTH operators have already successfully migrated 30 to 40% of their subscribers to the new regime, and even as we speak, 10 lakh consumers on a day-to-day basis are moving into the new regime. At the MSO level, nearly 5 to 7 lakh consumers are moving in on a day-to-day basis to the new regime, and with 20 to 30% of their total subscriber base having successfully already done that. My discussions with various people across the media and entertainment sector also seem to suggest that they have decided that somewhere around the middle of February, around 14th of February is when they suppose that they will be able to successfully migrate all their subscribers to the new regime. Now, coming to the second part of this discussion, which is about the rising of cable bills, which has been an intense issue of discussion and scrutiny. In fact, earlier today, R.S. Sharma, as you point out, had held a press conference to address the CRISIL report that in fact went on to suggest that should a consumer choose the top 10 rated channels, his bill would in fact increase by 25%. At that particular press conference, R.S. Sharma presented data that was curated by Indus Media and went on to suggest that ARPUs would in fact come down, and they suggested that, you know, ARPUs could come down anywhere between 10 to 15% in metros and by 5 to 10% in non-metros. So listen into what R.S. Sharma said at that press conference, which was held earlier today.
CRISIL has given this report, and we appreciate the professionalism, and we know that they are a highly professional body. But I think in this particular case, their analysis is not based on correct inputs and assumptions. That's the problem. If you begin with the wrong assumptions or unrealistic assumptions, you are bound to get the results. You know, it's garbage in, garbage out. So if you put in something wrong in the analysis and the part, and the result outcome is also not going to be correct. In Mumbai, the average pre-NTO, pre-new tariff order, was 325 rupees ARPU, which is basically a consumer was on an average paying 325 rupees in Mumbai. Now, post ARPU, those people who have selected this, their consumer price is 271 rupees. In Delhi, it was 303 ARPU. It is now 265.
Well, that's the TRAI chairman saying that the process of migration is moving smoothly and successfully, and also adding that it has in fact become cheaper, not more expensive for consumers after the new tariff guidelines have kicked in from the 1st of February. Winsley Fernandez, the CEO of Indus Media and Communications, with us here. According to their report, with the new norms, a consumer staying in Mumbai could save 54 rupees on a monthly basis, which is pretty much what the TRAI chief there was pointing out. In Delhi, they're expected to save 38 rupees. Ramesh K. Vaidyanathan, founder and managing partner of Advaya Legal, also here with us. He's been instrumental in advising corporates on the impact of the new tariff order and on their own business. Gentlemen, appreciate you joining us here on the program. We also did try to get CRISIL onto the program, but we haven't been able to do so, particularly scathing remarks coming in there from the TRAI chief. The CRISIL report basically says that monthly television bills for most subscribers are likely to go up, especially if they do opt for the top 10 channels by viewership. Gentlemen, let me start by asking you, and Ramesh, I'll start by asking you about what you make. You know, we were live with the press conference of the TRAI chairman, and I can see at last count there are about 98 comments that have come in on our social media page, and most seem to suggest that it has become costlier. Some say that, look, our service providers are not clarifying, they're not answering our phone calls, there is confusion. Some suggest that costs have gone up for the set-top box in itself. So, you know, what is the feedback that you're getting from the ground at this point in time?
Thank you, Shireen. I think the chairman went a bit overboard, if you ask me, because I think in his over-enthusiasm to defend what he has rolled out, and I can understand because he's fought through a long legal battle to get this point. I think we have to allow it some more time before before things pan out. The feedback I have got from the market and some of our clients is that it's just too early to speak anything about it. There could eventually be, if there is an informed choice, there's greater transparency, which is what is the objective. We have to wait for the market to play out. I think for the chairman to roll out some statistics at this point seems a bit over anxious in my view.
Okay, I think the statistics come from Indus Media and Communications. Winsley Fernandez with us, the CEO of Indus Media and Communications. And Winsley, this is the argument that people are making that, look, what is the basis for these numbers that have been thrown up? Because this new tariff migration has only happened from the 1st of February. Isn't it a bit premature to suggest that the average ARPU is down by 50 rupees or 60 rupees, whether it's Mumbai or Delhi?
Okay, Shireen, thanks for having me, first of all. And I think data is data, irrespective of whether it's preliminary or otherwise. We've commenced migration from the first, so all the data that we're actually representing is realistic data. This is not analysis, this is not conjecture, this is not assumptions, and this is not estimations. As you rightly mentioned, we've started converting customers or migrating customers to the NTO compliant packages from the first. And what we're getting results from the ground, and don't forget, we're in the trenches, right? We're actually dealing with the consumers on a day-to-day basis. We're realizing that consumers are exercising their right to choose their packages. And the packages that they've selected, which is something that you can go onto our website and have a look at, and every other MSO has, the packages that they've selected are actually cheaper than what they were paying earlier. So, and I'll give you some examples, right?
Okay.
India is not all about Mumbai and Delhi. India is also you know, way outside of the cities. So when you look at the service that we have as Indus Media, we have a cable business, which is in digital, and we have a hits business, which is you know, available all across places, including Kargil, Little Andamans, etc. A lot of consumers there are choosing to go with an FTA package, a free-to-air package, and selecting 1 or 2 pay packages. Now that's an interesting trend, because that is not something that they could do earlier, right? But because of the new regulatory framework coming in, they now have the right to choose it. And Shireen, I want to draw your attention to one thing. If you recall, that was the mandate of DD Free Dish, right? The reason why DD Free Dish has over 22 million consumers is there's a socio-economic or a segment, market segment, which does not want to necessarily pay, who wants, you know, who wants their pricing to come down. So when we've done a mapping across markets of actual consumers who have been converted, this is what we've ended up with in terms of data. Now, is it preliminary?
So since you're raising the issue of the FTA channels, you know, here's a comment that's come in on our social media page responding exactly to that, saying nonsense, freedom of choice of all DD channels, and some random channels are added in the first 100, plus the cost is increased than, the cost is increased compared to the previous pack.
Okay. So here's again where there was, and like I said, I think it's a matter of communication. The TRI regulations, the new regulatory framework, Shireen, allows you to even pick up your FTA channels. The only compulsion that consumers have, and which is rightly so, is the 26 mandatory DD channels. The remaining channels in that first 100 bouquet can be a mix of pay and FTA, and it can be based on the selection of a consumer. It doesn't have to be driven by the DPO. In fact, the chairman TRI has been very clear with us, and so has everyone else, that we need to be able to give the consumer choice. And that's what's happening. You're seeing consumers picking, in the Northeast, picking more English free-to-air channels. In the South, in Tamil Nadu, for instance, obviously they're picking up Tamil free-to-air channels. So I think it's a question of has the message gone out all the way and been communicated clearly and, you know, crystal clear? It's going to settle down. I think it's early days, and as they say, right, water finds its own level. We're seeing a gradual settling in, you know. Sorry, I hope that answered.
I do agree with you there, but Ramesh, no, I do agree with you that you know, I think to a large extent it is also a communication issue, because look, I mean, we work in this business, and even I had to sort of figure out which package are we a part of. Can I buy CNBC TV 18 a la carte for 4 rupees or not? So I would imagine that communication is an issue. Ramesh, and you know, the assumption was that could there be a stay? Could there be more leeway, more flexibility as far as the implementation of the guidelines were concerned? And maybe broadcasters as well as service providers didn't do a good enough job of communicating. But the consumer now seems to be caught in a bind and some confusion. So, you know, do you believe that over the next few weeks we will see this evening itself out?
Yeah, I agree with you, Shireen, because if you look at it now, it's utter chaos, and I don't quite share the enthusiasm of the my fellow speaker, because if you look at, I mean, I think they could have done a lot more in terms of you know, giving more visibility to what's going to happen, training people on what can be done, allowing some kind of a transitionary period. For example, if my own television at home is completely blacked out, so I don't know, you know, what's the what's the logic?
Well,
where
why
am I
is it blacked
call?
out?
And, you know,
because
so
you haven't migrated, and that's why it's blacked out.
No, so I did migrate a week back, or as soon as it started. But for the last 2 days, I'm not able to kickstart my channel. So I don't know what's the problem. But I think to say that everything is hunky-dory and we've rolled out all successfully, I won't quite agree with this. And we have to see how things pan out.
No, I think you need to take those claims have to be taken with some degree of proportion. But Wensley, on this issue, because as Advaya was pointing out, he's migrated, but he hasn't been getting his television is a black screen at this point in time for the last 2 days. Several other people, again on our social media case, also saying, one gentleman saying that my television is off for the last 8 days. What exactly is the problem there? If you've migrated, then why no service?
Okay, sorry. I'll tell you, and this is kind of a challenge that we're all facing in the industry. We're 180 television households. We're talking about migrating close to 120 million primary points over the next, from 1st of Feb to the 14th of Feb. Of course, we're going to have hiccups. There's no question about it. But I think we're seeing already, people doing close to 1 million customers of transition a day. Why is there a blackout? That is a cause for concern, because as per what even the TRI has advised us, that digital platform operators should not be blacking out customers. And if that is happening, that is genuinely, I say this with complete confidence, that is genuinely most unfortunate, because either we have created, especially for consumers, we've even created like a intermediate migration pack. So in case if there are consumers that, sorry, my earpiece keeps on. In case there are consumers who have chosen a particular package and who have not chosen a particular package, there is an intermediate pack, or what we term as a BFP, best fit pack. That means if a consumer has been paying 300 rupees and getting a whole bunch of channels, special packages have been created, Shireen, for consumers like those. So there is no inconvenience. The one clear mandate from TRI is that there must be no inconvenience to the consumer at any level and at any point in time. So this is unfortunate. I'm not defending that. But like I said, I'm seeing that more.
But you acknowledge the fact that you're seeing this happen. You're acknowledging the fact that there are, I mean, this is not a one-off. Ramesh is not the only one who's being singled out. You are hearing cases of these blackouts.
So let me put it to you slightly differently. Some MSOs, the smaller MSOs, have chosen various models to transition their customers. And I'll give you an example. So there is a small MSO in Jharkhand with just about 50,000 customers. He's had a challenge of getting his customers to come in and agree to a new package, etc. So he's decided to basically do a downgrade. So the first couple of days he did a downgrade of certain pay channels. The second day he did a further downgrade. The third day he decided to black out the pay channels, right? And retain the FTA channels to convince or push his customer. Like I said, Shireen, you're talking about 120 million primary points. Everyone's trying to work out different models, Shireen, to get that on board.
We could have continued because, as I said, lots of questions pouring in on our social media pages on the new TRAI tariff regime and what it means for television viewing. Remember, even as far as ratings are concerned, there's going to be a blackout of ratings also on account of this migration. But Ramesh Vaidyanathan and Winsley Fernandez, appreciate you joining us here on CNBC TV 18 with your take on the new migration rules and the impact on TV viewing.
Ace stock market investor, that's Rakesh Jhunjhunwala, is betting on the BJP's victory in the upcoming Lok Sabha elections. Speaking at the 10th edition of the TICON Mumbai, the market veteran said that he believes that the BJP will surprise on the upside with its seat tally. He also added that he would like Narendra Modi to return as the Prime Minister. Listen in to those exclusive conversations.
I would very much like that Mr. Modi becomes the Prime Minister of this country again. And I think my personal judgment at this moment says the BJP tally will surprise on the upside. And you know what is this? UP mein 40 aayegi, bolega nahi, 15 is more appropriate. What is the basis? Right? I've got so many lists here. Maharashtra party, how much BJP will get, how much, no basis anything. So, but I feel BJP will come. And second thing I want to tell you, because India grows not because of politicians, but in spite of them. There is pride in India and Indianness. I'm not saying Hindu and Hinduness, India and Indianness. So why should I not? And don't you want a common civil code? Why should I not be allowed to own land in Jammu and Kashmir? But the world is not going to end if one temple is made, if you believe that Ram was born there. So I am an out and out BJP supporter. There will be some shocks, people will bear it. I was thinking about it, then I read Sharda scam 17,000 crores, Rose scam 20,000 crores. It's all gone to retail investors only. So it's all part of financial markets. Scams, exposes.
Well, Rakesh Jhunjhunwala there betting big on the BJP and betting big on Narendra Modi's return as the Prime Minister in the upcoming elections. Let's shift focus now to some courtroom action. A big twist in the Sabrimala case. The Travancore Devaswam Board, which manages the temple, has made a U-turn. The board is now backing the entry of women of all ages into the shrine and wants the Supreme Court to junk the review petitions. Now, what's interesting is that this observation was made by none other than one of the judges in the bench, in the 5-judge bench, who in fact interjected and pointed out that the Devaswam Board, it had been seeking to restrain the access that women have between the age of 10 to 50, and now it is seeking to accept the Supreme Court's judgment. In fact, that was the stance that the Devaswam Board took before the Apex Court. They've revised their stance. They believe that biological factors cannot be grounds for discrimination, that they've accepted this judgment that has come from the Apex Court, and that equality is a basic tenet of our Constitution. That's, of course, the stance that was taken by the Devaswam Board. Meanwhile, the Kerala government as well has opposed the review petitions, saying that this cannot be a matter of private faith. It's a matter of public law when it concerns women, which makes up for half the population. Further, there were various petitioners, in fact, who had sought to review the Sabrimala judgment. And what's interesting here is that they made various arguments to the extent where they said that as far as this particular shrine is concerned, there is a certain nature of the deity that needs to be respected, that this judgment of the Apex Court has not been accepted, which was evident from widespread protests as well as the violence that we had seen as a result of the Supreme Court judgment, and that should be a ground based on which the Apex Court should consider. The big takeaway from today, of course, is that the Apex Court has reserved its judgment. All eyes now on the 5-judge bench headed by none other than the Chief Justice, Justice Gogoi, to deliver the verdict and perhaps with it some closure and clarity on this contentious Sabrimala issue. Well, let's continue with the court action. The Supreme Court has issued notice to Advocate Prashant Bhushan in the contempt petitions filed by Attorney General K.K. Venugopal as well as the central government. Now, the Apex Court has sought Prashant Bhushan's reply in a matter of 3 weeks' time. Now, here are the facts of the case. As far as this particular case is concerned, Prashant Bhushan had tweeted in context of the appointment of Nageshwar Rao as the interim director of the CBI. He had tweeted that despite there being no meeting of the high-powered committee consisting of the LOP, the leader of opposition, the Prime Minister and the CJI, he had tweeted that the minutes of the meeting, which apparently did not happen, had been submitted before the Apex Court. That was not the case, as had been argued by the Attorney General, that the meeting in fact had happened, that this tweet, the petition went on to say, was malicious in nature, that it was dishonest, that it was reckless on part of a senior advocate such as Prashant Bhushan to have made such comments. In fact, there were 2 petitions of contempt, one filed by the Attorney General, the other by the centre itself. The Attorney General is only seeking for guidelines to be laid down with respect to the comments that are made by lawyers in the public domain. While the matter is sub judice, the centre on its part, however, has sought punishment as far as Prashant Bhushan is concerned. So clearly some pressure there being applied as far as Prashant Bhushan, activist lawyer Prashant Bhushan is concerned. We will see the hearing in this case resume on March 7th. That's when Prashant Bhushan will have to come back to a reply to the contempt notice that has been issued to him. So we'll watch for that as well. Even as global smartphone companies bet big on India, a survey by Pew Research Center highlights that only 24% of adults in India own a smartphone. Now, this is worse than Nigeria, than Tunisia and Kenya. Further, when it comes to smartphone penetration, India ranks amongst the lowest in the 27 nations that were surveyed. This includes 9 emerging economies as well. Now, Kevin Lee, who in fact went through that survey, crunched those numbers, is joining us now with those findings. Kevin, take it away.
Well, that's right. In a survey done by the Pew Research Center in 27 advanced and emerging economies on smartphone penetration, India has the dubious distinction of having the lowest percentage of smartphone-owning adults at 24%. That's against an average of 76% in advanced economies and 45% in emerging ones. India also has the highest gap between the percentage of men who own smartphones as compared to women, and ranks lower in smartphone penetration than Kenya, Tunisia and Nigeria. Beyond this, 34% adult men own smartphones compared to 15% of adult women. That's a percentage point gap of 19 percentage points as compared to 9 percentage points 5 years ago, which suggests that even as smartphone ownership explodes in semi-urban and rural parts of India, this growth isn't that equitable. Interestingly, more Indians own feature phones than smartphones, and the smartphone-owning population of the country is in fact lesser than the population who doesn't own a mobile phone at all. 40% of Indians own feature phones and 35% don't own any mobile phone. Also, only 8% of Indian adults over the age of 50 years own a smartphone today. So there's something to put the digital India dream into perspective. Back to you.
Well, interesting finding those. Let's shift focus now. IDBI Bank has initiated the process to exit its life insurance joint venture. Sources say private banks are keen on acquiring the 48% stake held by the IDBI Bank in IDBI Federal Life. Yash Jain is here with more details. Yash, what are you picking up and what is the valuation for this 48% stake held by the bank?
Well, to be specific, it was January 22nd when the board of IDBI Bank gave its approval when it comes to divestment of the bank's 48% stake in the life insurance venture, that is IDBI Federal Life Insurance. As far as the way forward and progress on that front is concerned, what we're given to understand is that IDBI Bank has already initiated discussions when it comes to this particular divestment with some of the top private sector banks. What we're given to understand is that these private banks as of now do not have any life insurance venture. Also, they are not in requirement of any bank assurance network when it comes to distribution, but they are purely seeking a brownfield entry in the life insurance space. You also spoke about the valuation, and on that front, we are given to understand that the transaction is expected to value IDBI Federal Life Insurance somewhere between 3,000 to 3,500 crore, which is 1.7 to 2 times price to embedded value. But do remember, that's half of the valuation which IDBI Federal Life was seeking the last time when it attempted to come to market for a similar kind of stake sale. Also, this is just one part of the story, but along with that, we are also given to understand that IDBI Bank has also had meetings with the foreign partner, that is Aegis Insurance, to essentially understand if Aegis would want to dial up its stake in the life insurance JV from the current 26%. But do remember, even if Aegis agrees to dial up its stake, it will only be allowed to extend it by another 23%, because then of course there are FDI regulations which restrict any foreign partner to own more than 49%. So even if that happens, IDBI Federal Life will need another partner when it comes to buying that balance stake over and above what Aegis purchases.
Right, Yash. Thanks a lot for that. It's the 10th edition of the Telecom Mumbai, organized by the Indus Entrepreneurs, saw the big names from the startup space discussing ways to transform the sector in India. Now, the key highlight, however, was the keynote address by Natarajan Chandrasekaran, the chairman of Tata Sons. Chandra, as he's fondly known, is stressed on the importance of harnessing digital capabilities. Nisha Podar filed this story.
TIE, the largest platform available for connecting the investors and the entrepreneurs, kick-started its conference in Mumbai with the keynote address by none other than N. Chandra, the chairman of Tata Sons, who emphasized on the importance of harnessing the digital capabilities.
We have the physical capacity today. What we have is what we have. This is not to say that don't build additional physical capacity. We'll never become a 100% digital world. And the physical capacities can never catch up, because both time is not there and the capital will be hard to come by. So it is about building the digital interface and innovative solutions, industry by industry.
Talking about creating unicorns in the startup space, Nykaa could well be one of them. I caught up with Falguni Nair, the founder of the company, who shared the IPO plans. And from the investment space, well, Patni Family Office is the one which is investing in a lot of tech startups, ready to ride the next wave of technology disruption.
We should be well on our way to profitability that I'm projecting, and if that happens, then maybe 2 years or so we should be there in the public market.
Once we sold the business about 7 years ago, we wanted to recreate some of that success we had evidenced in that transformational experience by investing in new age businesses, in new age founders, kids on the street that had smart ideas that needed not just capital but also a little bit of help in building their business up to the next level.
Well, that's all the time that we have for. It's a wrap on this edition of India Business Hour. Thank you so much for watching. Have a good night.